This club. It's Friday. It's just not Friday. It's March the 17th, 2025. Welcome, everybody. My name's Darren Hancock, and here we are in the middle of a little run up higher, kind of like what we were talking about yesterday in our channel. Looking for a run back up into this first little box right here. We can get up on top of here and into this box. That'll be about 50% of this range. So we'll see how we do from there. I hope and trust that you all had a great weekend. It is St. Patty's Day today. Happy St. Patty's Day to all of you. I hope you're all having a wonderful time. That's why I wore my green today. My wife says it's green, so. Happy St. Patty's Day to all you folks. Get yourself a green beer today. These little notes. Take anyway. Let's have a look at 44. Let's look at the markets here this morning, and get a butcher somewhere we're at. So let's look at. So I'm looking for a run up today into Monday, Tuesday here. Why did I have that down to 17? All right, let's go into the hourly. Hourly here. That's the upside we're looking for. Let's make sure we are live on YouTube. Good, we're live. We're live, we're good. All right, 10 of you are already on board already this morning. Let's see how we act inside this candle here, 15-minute here. See if we get a fair value gap forming in here. And see if we just come down and tap this high and continue marching higher. I want to see this fair value gap or portion of it stay open and go higher. So we'll see what we get here. And let's do a quick little run through of the rest of the markets. I'll spend some time here on NQ in a minute. We've already ran out yesterday's high or Friday's high. So I'd like to see us we're taking out, well, I want to take out this next high here now and start getting up to 56.80 and then run back into the consequent encroachment of this. Is that a monthly? Yeah, it is a monthly. We start to trade back into the monthly. That will be a fair value gap because we haven't closed below here yet, even though we've run through it. I want to see us close below that. It's also a weekly imbalance as well. Weekly puts us right here. So I'm still looking for this upside here. I'd like to see this fair value gap above us here just get taken and continue climbing higher. See if we can get back into this level here, or at least into the consequent encroachment of the weekly imbalance. Dow Jones. This 15-minute, let's go with an hourly. I'd like to see it stay above this level right here. We close above that level in the next hour and continue marching higher. This mean threshold has to give way now, and then rejection block next, half the wick, and away you go. Key level, we've hit that natural gas level. We're looking for natural gas to get back up into this little imbalance above us here. And I'd like to see agency close above that. At least we're opening up at 1025. So a little tap down to 1010, 1017 area. And start pushing higher. Get back up into this range, clearing out these equal highs above us. Wheat, we're still looking for upside in wheat. Soybeans, I expect soybeans to roll over and get down into here. Sugar's got its buy side liquidity above us here. And now that we've hit this level, put that back on there so we know we've hit it. Nailed it right on the money right there. And now I want to see if we get back through that level. If we close below that level, then we're reaching for those lows again, and then we'll look for these equal lows below us here. See if we hit this level we're still looking for today. We've still got another 78 more levels, 78 more handles to go. Wait, this commercial to end here. All right, we're back. All right, cocoa. Keep your eye on cocoa here for I want to see cocoa get above here on the hourly level. We can stay above that, use that as support. I'll be looking for upside objective. Would be there. And here. Yeah. I'm going back to cotton. Nice reversal here. Cotton's already hit the box-to-box trading already, so we'll wait. We're inside that range right now, so I want to see if this returns back to this discount box and we end up running higher, or just going back into, which we haven't done yet. So I'll be looking for a return back in here in cotton. Get a return off of here and then run higher and take that out. Little piggies. Getting back inside our box. Let's see if we get back above this level, find some supported here, and start taking these highs out. We got to get above that candle on a close. to start running back up into here. Good oil. Oil. You're kind of stuck in here right now. You're right inside there on a 15-minute chart. So let's see how that pans out there. If we get back below this level, get back below 67.85, I'd like to see us retap that 67.890 and then start getting back down into this word block down here. Gold. Oops, that was a 4-hour, wasn't it? That's a 4-hour level. See if we can get below this level here and start using this to come back into the range. If not, I'll have to get above here on the hourly. It's a close above that. See, we've traded below this, coming back into it. Expect to see this come lower. Donkey, good morning. You're first to the door this morning. Good to you. Welcome, welcome. And still looking for some upside action and natural gas. Still looking for this next push higher. Bitcoin. Get down in here. We close below 82.90, 82.902. If we get below that on a close, take out this mean threshold, watch for it to trade back into this level, and then continue coming lower and reach down into 82.599 and then lower if we can get to, if all else continues to unfold as it should. I don't want to see this mean threshold hold. I want to see that start pushing through here now, reaching for these relative equal highs and start digging up into that other price imbalance above us. There, discount. I'm still looking for this discount box to get hit. If we could extend that all the way out now. Let's just extend them all out. Okay. If it's not going to do that, we'll just do this. Oh, there we go. Oh. So look for that as the downside. Disney. Craig's in here. We're looking for this to hold Disney. If it rolls over now and takes out this on a close, look for a deeper dive. Nothing there yet, DAX. I'm looking for DAX to at least get up into here right now. It's a 4 hour. We said we give Ford the upside run. It hit that upside. Now I'm looking for this to roll back down into here. Looking for this euro. That's great. Found support off of here. We're starting to go higher. Look for this next objective up here. Take this high here first and then this objective. We'll see how we act in there. And this is our terminus. Okay, so we've hit this old high here. We've left this piece of this open, which is what we're looking for. Now I want to see this start to react off here and start to go a little higher. See how we come back to institutional order flow entry drill, just tap in below that and came off this high. We're right to the mean threshold of this old candle. So I'd like to see that just start marching higher now. If it rolls over here and starts to eat through the consequent encroachment of this, it starts to lose its graded response for me. I want to see that just start leaving and going higher now. Adi, good morning. Hello, Craig. Kamal, good morning. Yo. 8:30, good day. Was it that indicator that what is that indicator that you're using for this session? Breakdowns in color. This one? There's one called the ICT One Setup for Life that you can use. This one here is New Week opening gap, regular trading hours gap. I don't know who that one's by. These are the ones I got. So you can look at those. This one here, I like to have my personal one on there. That was made for me by Tristan. Good morning, Joe Mac. You've got two overlappers here. $67.72. You don't want to get any lower than that. You're above this one, so this one's giving you a long right now. So this long, you don't want to see it get below 66, 67.87 or 67.85 here in the 1 minute chart. Right now you're in a buy for at least $68. And if you can get above that on a close, then if you can get above 68.07 on the close, I'll be looking for 68.14, 68.12, somewhere around there. If you can get through that, then we're looking for obviously higher prices. Morning, Abs. Campione, good morning. All these colors are my own colors. If you're looking for specific session breakdowns, I look for specific hours. I have a color code that I use, and that's just simply, it may not be the question you're asking me, but if anybody's interested, when I use this indicator, for example, and you pick these colors, each one of these colors has a specific time frame, and So you could just go like, well, my weeklies are in gray. The reds here, if that's red or orange, or whatever you call it, it looks like red to me. Could be red. Anyway, I'll take this one here. That's monthly. Daily is blue. Then hourly, 4 hour is in here. And then you can start splitting these up, and you can split the rows up in colors in terms of the intensity if that's what you're after as well. So I don't even want to see this get, okay, there you go, it's right through it. We're taking you out there. There's your first indication to go higher. It ran straight through and took you out. That's why your stop loss is there. You get a dramatic take or a quick take like that, it's done. Usually you want to see it just a pop below it and you go, I'm on the wrong side. Comes back up, gives you an opportunity to get out. Then it comes and takes your lows. So looking for down at these relative equal lows below you, and this little fella down here at 67.78. Yeah, it's definitely not done doing its little run down here now. Come back, find support at this or inside. Yeah, just give a little tap off of here, roll over and keep coming for the slow here, mean threshold here. And then you got downside over here as well. So, bit of reversal here, trade back up into it, get this little market structure break here, move deeper into this range. Where are we looking for? 706. 711, 709, somewhere around there. Oh, that's this. Let me have a look at this one here. This is ICT one setup for life. All this stuff. Takes the Asian sessions and all that kind of stuff. This is the ICT one setup for life. It breaks down each one of those sessions here, Asia, London, and just puts them all in kill zones for you. I used to like all the kill zones. I used to focus on the kill zone, especially the really good one. It's just which is when you trade the Asia session and you trade above the Asian session in London, and then come down and tap the Asian sessions to for a continuation on the day. Like here, you have an Asia session. Wait for this commercial to end here. You have this Asia session here. You trade below it, you trade back up inside it, and then continue on the downside. Asia session, trade above it, you come back right to the top of it here, and then look for a continuation to take out the highs. So I like the Asia session as a pivot point or a bounce point to see if you can use it as a support level. This one here, you traded below it, came back up through it. Now I want to see it bounce off of this, use this as support, and start pushing. All right, I don't really use the sessions anymore as much. I tend to use this inversion now, and so I'd be looking for higher prices in here. But it's nice to have a bit of color on your chart. Aman, good morning. We have a trade below here now. What time are we looking at right now? 7:23. Peter's taking some time off. Good man. We're at 62% of that range right now, and we're right back into these order blocks here. We've tapped this reversal here. You've tapped this one over here. So if you start seeing a reversal, changing directions here, you want to see a structure break, get above here to start going higher again. We're at the optimum trade entry reversal category here now. We filled that fair value gap in, so it's lost this one here. Reverse, trade through this one, reverse, mean threshold taken, trade all the way back up into immediate rebalance, take out the low, trade back into the low, into 62%. We're trading through all these levels now. So I like to see that, just now that we've traded through that level on the little wick already, we didn't just tap it and snap off of it. So that could be heavy for me. Right down into this level down here. It's traded below that on the close now, so you want to see this continue coming lower. Allow for a retrace back into midpoint, this low. You got relative equal lows below you here. Watch this level right here. Yeah, a portion of that stay open a bit more and keep coming lower. Here's the open. Come back to the mean threshold here. See if we can get this going lower now. You want to see it get above here. You want to see it just start really pushing lower now. Get through this original consolidation. Get down here below these lows. Yeah, gets above here, changes story. Gotta be down there, so let that one go. Wait and see here. So we haven't had this one retapped. We haven't had this one tapped. We haven't had this one tapped. The only thing we've had is just this breaker here, get retapped and gone higher. That's too premium for me, so I'm gonna wait. I get a feeling if we do come up into here, we're gonna get a retracement back and catch these areas we haven't been able to get a ride on yet. So you see it eat through here, it's mean threshold of that candle at 734. I'm looking to see how well we hold on here. So institutional order flow entry drill, consequent encroachment here. So grade your response. Ideally, you want to see that. That's the best one, A+. Just leave, tap there and go. get through here, get to the other side of that, look for a range extension. We've hit that premium array now, but there was nothing in here. It gave you an indication. I bet you if you look at your 15-second chart, you'll probably see an entry there. D might have caught that 15-second entry maybe. Now we look for, I want to see this. I forgot to put all my levels on. Let's go back here and do all this stuff. Got to get in the habit of doing this every single time. Didn't even get 830 for a D there. So looking for this upside here. I like to see some sort of retracement back in here, give you an opportunity to get on here. On a 1-minute chart anyway. If it's not there, don't sweat it. Don't feel like you've missed the boat. There's plenty of other boats in the ocean. We'll jump on one of them. We might get a quick run to this level here for 10 o'clock. And then see what kind of response we get off of that. It's got a long right off this candle here. As soon as it got validated, right off that high there. Now I'm just at break even, plus a couple of bucks. I want to see this candle hold now and this continue moving higher. This is like a propulsion candle. You want to see that accelerate price now. 2088. Morning, Hans, Russell. Good morning, Shepard. We're looking for that 50% of that range we talked about yesterday in our market analysis, pre-market analysis yesterday. That was a fun day yesterday. So thank you for all you guys who attended yesterday. Gave you some really, we worked out some really interesting little concepts there yesterday. So a 15-minute chart, if we're looking for a upside objective in a 15-minute chart, we have this first fair value gap fill here. And then I'm looking for anywhere from 0.64 to 110. So looking for quite a bit more upside here. That should put us right near this little imbalance sitting right here. Yes, I missed the live, but watched it after. Thanks for the good nuggets you gave. You're welcome. You're welcome, welcome. Yeah, it was a fun day yesterday. My wife phones me and says, "Are you still on that show?" I was like, "Yeah." She goes, "Why?" I'm like, "Because you're not home." I'm just going to keep going. I said, "The guys want to pay for you to do send you off for breakfast every morning." She's, or every Sunday. She's like, "Yeah, yeah, sure. I bet they do." So I got in here and they followed every candle up. So I'm out right here now. I don't know why this thing keeps mapping every damn fair value gap. Oh, it's because it says that's what it does. I don't want that one. I want just the first one. First fair gap. Let's have a look at this guy's one here. Nope. Don't like your one either, Joshua. Let's see. ICT, new reopening gap. And do both. Cancel. Ditch. indicator, Joshua Ditch, oops, move from favorites, go back, how the hell you get out of here? That's the one I want. $7.52. Now we can get this big old retracement back into our levels we were denied. %, put us right in the middle of that first level that we could just pop through it, tapped it, and left. So we'll see if we can get back down there. Yeah, yesterday's video was a keeper, I think. It's one of those put it in your favorites list. We had some really good information there yesterday. This could be, what are we looking for here? That puts us right to the top of the daily fair value gap imbalance here. That puts us right back to the top of it if we hit 50% of this range here. This is the next price leg higher. See how we popped above this one, tapped this, kept going. See if we come back down into these levels here now. What's oil up to? Swept the lows, reverse, watch this level here. It's going back inside that fair value gap. If that first presentation there, you come back and tap here, that looks like a nice little long market structure break, aiming for up here, and then continue higher. There's 50%. 62% will put us right here. That'll put us right at 911. %70 puts us right back into this fair value gap that we never got a chance to get in on. There's one here you didn't get a chance to get in on either. And then the first presentation fair value gap, which puts us right back into that order block on the high. So let me remove this one now. Look at 62 right here. See what kind of reaction you get off that. If we just ran out last week's high on Wednesday, or midweek high, It's Tuesday, Monday's here, so that'd be Monday's midweek high was taken. $75%. So right on the tips, 50. Do you think that bearish SMT will hold? NQ took out the 4-hour. Yes, didn't. No idea. We talked about SMT on the weekend. We tried to use SMT. I have no opinion of that. Those other guys might give you a better opinion on the SMT than I can. I never use that SMT stuff, so change in direction here. I'm break even plus the cost of the trade now. That just came back and took me. I want to see if it gets back into here. Little tap right there. There's the first one, second one, third one. If we get above this level, if you get a market structure shift up here, use this level to continue pushing in there. And again, we're aiming for that upside objective there. All the time we don't get a body above here, go looking for this one. as Derek would say, we're looking for you'd want to see it get right down into this one here for a discount. Yeah, let's take it there. Take it. I want to see this one stay open. That's 50%. I want to see it come back down below that. It's done its thing here now, so either leave or wait for market structure shift up here. Now you want to see this candle get validated, get a little scaffolding above you. It's not validated yet, so it still come back and take me out like that. Gotta get some build up above here. We're still inside this level here. Oh, wait for something cleaner to set up, and it's still before 10 o'clock, so. Starts to lose its graded response if we start to dig back down into this discount one here. Let me just get right to here, so you know what I'm looking at. Just want to see it start climbing right out of here. Hilarious. Bus pass. Here's your 10 o'clock. Oh, just gonna say goodbye. We're in the evening there right now. Okay, so we are heavy. We walk through this level here. If we go by this level, I'm going to put a limit order in here. So we're going to get hit. Mean threshold of that candle. We filled this level now. We might come back to here first before going lower. Yeah, I didn't break anything yet. The next downside is inside this candle here is the mean threshold. That's the line in the sand for any bullishness anyway. Now that we've hit it, I'd like to see that just stay open here now and continue pushing higher. Even if it bounces around and comes back into this candle's high again, I'd be okay with that to go higher. I don't want to see it turning into a bear candle today. Otherwise, it's one of those wait and see kind of. Do we get back down into here before lunch hour? So if we break below your 830 candle here, Hadi, on a close, then come back, find support at it, I'd look for this to come lower. You're still inside the range here, and we're still inside this fair value gap that you never got. Remember, we never got it validated. It's come back validated here, and now it's come back and the bodies are respecting it here. And this one here has been filled. So we're into a deep discount. So if we start to get a reversal back through this level right here on a close, look for this one, internal range, look for that level to give way. And if that does, then you have a market structure shift for higher prices. Otherwise, you're back inside this range, 50% of this range. Right there. That's the level where I was looking at. I wanted to get short on it right there. See if that actually goes short from there. Then I'll add a little wick through there. Watch the bodies here. Usually it taps this and rolls over and comes back down lower. Premium level, just tapped it right there. So now see how we're closing above here. Could be going higher now. We'll see where that closes. No body above there. Silver bullet. If this was a silver bullet, 10 o'clock, 10:01 right here, return back into it for lower. Still have no body above that level yet. This 10-minute one might take out that level right here. 9-10 turn. If 10 doesn't take that, look for the 12 inside this range. So now I expect to see when this one closes in the next 10 seconds or so. Is 11 to hold here and then continue going lower. If 11 beats this one here, then you're looking for 12 to get up into here. 794. How's that for a little dyslexia? There. Close through it. You want to see a body close up here now. Now, if this 12 holds, we've already got a wick through here. See a roll back down into here. 13 and then 14, maybe start to see our squabblers start to push higher now. Moving it to break even now, plus the cost of the trade. So I'm just sitting below here. I want to see this market structure shift here now. It just came back and took me there. Very choppy right now. Morning, Pablo. Could be around 50% or so. So we need to see a break above here or here. When you're into this kind of chop, you want to see a shift here, at least above here. Got relative equal highs above you, relative equal lows below you. We're at 50. It's got to start breaking up above these highs now. We're still above this level. Oops. We're still above this level here. We're inside this one here. Could be a choppy day. Thank you, Hadi. We don't know if it's going to actually transpire, but we'll see. It's interesting. You can build a narrative and support it, and then it not even pan out, just because things change so rapidly, right? So you got to be able to adapt to the market. Just looking at that straight daily, we have to get above this level here on a close to start pushing for here. So even if today ends with this candle closing above here, I'd be all right for a retracement back in here tomorrow, and then a push up in here for Wednesday. Now we've validated this candle. I like the idea that we've hit the high and the open. That's it. That's why I don't want to see this come back down below that level on the daily level. I want to see it's hit it once and started climbing higher. You know, you can come back down inside this old high right here, which is back into here, and then start going higher again. So 9:30 or the 10 o'clock may run out this this downside here. At 8:30 or 9:30's run, like roll over here and take out this for 11 o'clock or lunch hour, and then start pushing higher. Yeah, I'd be okay with that. Ask and ye shall receive. It closed below this level right here on 3 seconds. Get a retracement quite high now into here. March to June, contract changes. Slowly dragging my stop loss down here. I took a chance from that big wick that we were going to go lower. Just looking for the first lows here. Rejection block's already hit. Fade. Looking for a run back through here now. See if we close below here. And then look for a run into through here and reach for the 8:30 opening in. There's the discount box right there. All right, let's see if we can kick off of here, come back into this range. I still want to see this get the 930 get taken out. If we're going to go higher, I want to see this 930 get taken. Get back into this discount box here. We return back into this level. We want to see if this can continue to go lower now. Keep tapping on that discount box. Like, are we going to come back up through this level right here? I'm looking for this level right here. We're just coming back into it, find some support at it, and keep pushing lower. Or do we get through it, find some support at it, and eat through this main threshold here? Like this, so if we got another price leg lower, puts us right into that 6 a.m. candle again. This morning at 6:26. And it's the regular trading hour gap down here. Where is my regular trading hour gap? Show the regular trading hour gap. $6.62. Look for the first 6 o'clock, 6 a.m. candle. If we come through Hadid's 830, find some support off the breaker, which is right just above his 830. Look for a run right down from there. Good idea. It's right to the top of that level right there. You're already through this one. So if you're just coming back into that range, 50%, you're just above here, you want to see it get back down below here right away. If it continues to revisit this high on a close, then look for these equal highs above you. Tapping it. So you start drilling right through it. If you're bearish, that is. If you're bullish, you want to see that continue to hold price here now and start to go higher. So we've ran out the 930 low, and we've got a reversal right here. We're back inside this range here. Unless we close back below this first fair value gap again. Chart. Yes. Oh, yes, indeed. Yeah, I'm going long on that as well. We have a body above this, these two candles here. We run above them with a body. We come back inside them, and they're starting to get a snap off of it. So I'd like to see that start to really climb out of here now and turn into a bull candle, take out those highs and start aiming for our upside objectives. There's your reversal here. You come back to an institutional order flow entry drill on the hourly and kept going higher, retraced. Now you want to see this really start to get some legs and get out of here now that you've come back and tapped this previous hour's low. That was the 930 open. That's all done. Our reversal is here. Now I'm just looking for that to start climbing. Take out the old high here and start moving up higher. I'm in this long from here. This old high right here. At 735. So we'll see if that continues to pan out. And I'm still looking for that upside objective way up there. So I think I'm going to trade this differently this time. I'm going to trade it for the next reversal. So reversal to reversal instead of box to box. I'm just going to try and wait for the next change in direction. And then I'll See if I'm the right or wrong side of it. If this rolls over here and punches through here one more time, then we're looking for the lows again. Tap it one more time. When you're bored, what was your area of interest to buy in crude oil? Crude oil. You stay short in here 15 minutes. We're below this level on a close. So if we come back into here, find support off this level, I like to see that you could come as high as a retracing back into these old lows here and continue coming lower now that you've broken this level on the downside. Right there on a 15-minute chart, we could see a return to here. And then continue rolling over and run into this level here. And the next level you're looking for inside that is, get out of there. $640. See what kind of response you get off this. You have to get like a structure break if you want to see this go higher now. Not just a run back up into internal range of liquidity. If you really want to catch this on a long, watch for a run back down into here. And then see how you respond off of this level. And then 75%, then that gap, and see what kind of responses you get off those. Here's your next macro. On an hourly basis, if you could just tap this old high right here, which is pretty much that consequent encroachment we were talking about, you'd want to see that, just tap that and then start to pull back. So Craig, look for these levels, like for consequent encroachment, this old high, the body, and the mean threshold. I wouldn't want to see it lose that. I still want to see this stay open. It's a nice little breakaway gap there and continue pushing higher. You'd have to get back above 67.94 on a close, 67.99 on a close to go higher. I like to reach for a range extension. Otherwise, if you're just looking for a lower reversal, look for any potential reversal down in here for the consequent encroachment area there, which is 67.40. It's another 10 cents down. See what kind of reaction you get in here. Copycat, it's destined to go high. All right. I was watching the golf playoffs, so we took out the previous highs dailies, except that for ES, not heading lower. Well, hourly still says it's supporting going higher. And I don't see a reversal up here on the hourly chart just yet. So if we do come down deeper, you're looking to return back into this level here. So again, if we take out this on the close and reverse and come back into it, we're looking for a continuation on the downside. I think we'd have to close below that first presentation and this inversion here. The bodies are just hanging on it, so it's hard to say. It's quite choppy right now. It feels more bullish right now inside this range, but that could quite easily turn on us. And I'm still like 51% bullish. And I'll change my mind up if we break below this low right here. On a close, then we're running for a range extension and potentially lower prices. If not, %62% will put you right on the money here for continuation to the upside. Oops. I like the fair value gap to the left in that area. Yeah. See, we're already right to that consequent encroachment right now. You've tapped this. You want to see how you act in here now. So I'd like to see this. That's a fair value gap. We'll trade through it, come back, find support at it, break this little structure right here. Use these two candles as support to continue pushing higher. That's ideally what I'd like to see there. Now that you've hit that key level there. Now you want to see it accelerate through here now and quit mucking about. Don't worry about it, Chris. There's not a, it's not a good day for clean setups, that's for sure. That mean threshold's been hit right there on that candle. We're not getting any bodies below here yet. It's one of those ones where you can higher time frame, it's come right back to that level. That's like your line in the sand. You don't want to see that line in the sand get close below. So now see how we've dropped below this level here. Now I'm looking for this level to get taken. And if we close below that, range extension. And then Derek's view of lower is in the cards. They ran out those lows again and finally hit the bottom of this wick. Get a body below there. We've already got range extension, so I like this order block here. Below it now. Put one short there. Now you can see it come back into here, or this regular trading hour gap. I don't want to see it get above that, so I'm going to be sitting up here. Yeah, I should graded A. Let's like just tap this and let's get out of Dodge here. Aiming for that 6 a.m. candle. On the 15-minute chart, these relative equal lows at 660. So it breaks that low. I'll go to break even. Just because I don't want to see it come back and revisit this now. I want to see that just keep going. So we'll break even now. Plus the cost of the trade, 30 bucks or so. Come back, tap here. You pay yourself there. I've only got one on, so pay yourself at that low. Now, if this runs through that little hole there, then it's going to come back and take me. You look for a higher entry in here. So see how we've got this here? I don't want to see a body start getting above here now. Otherwise, I'll close it out. Takes 3 seconds. Come back and tap me out. Get out of that trade. That's going longer. That's the fail safe. So you can bounce off here, come lower, but see we've traded back through that level. So to me, that's going higher. So that's the opportunity to get one trade off at break even and move to the sidelines and wait. And if it comes back through, I'll wait for a decent body to break through here then to go lower. Otherwise, that's going higher. Traded back below it, so we're going lower now. We're back inside this little imbalance down here, waiting for a body to get below it. In here. Looking for that 6 a.m. candle, I think. Watch for it to return back into this imbalance. Thanks, Hans. That regular trading hour gap is now filled. We've swept the lows with a little wick. Just tap that order block there. I want to see that keep coming lower now. If we start to break this structure here, get back up above here, then we're looking for these equal highs and again return back to another run higher. I'm thinking we're looking for 642 to 610. Yeah, 642 to 610 will put us right in that 6 a.m. candle there. Well, I'm looking for the 6 a.m. candle for sure. And then you're looking for the midnight open candle and the open range. So we tap off at 8:30. We traded through it here. We've tapped it. You want to see this continue coming lower now, I think. And we're aiming for this discount box here on the hourly. So that's 642 to 610. Around there somewhere. It's the 9-10 turn here. Maybe a raise right here. It's the 910 tips turn, right inside the level we were talking about. So when we were talking yesterday about how using tips for a premium level, 910, 9 hasn't quite hit it yet, 10 hits it, gets a reversal. That's how you can use tips to your advantage. So now we're on 12, 11, 12. See a reversal at 12. Unless we get a body through here. This is when that little squabbler's at 9, 10, 11, 12. Seeing who wants to make the high. Threshold. So we're above this level now. And we're through the mean threshold of this candle. Green is fill. Oh my god, is this? For microstructures, I'll go for look for a long. It's a real challenging morning this morning. It's not giving us the perfection we're looking for. We're finding support above here, so you want to see that go higher now. You want to see it break this little structure here and use that for support. Again, a market structure shift, and use this candle to go higher. I don't think they're going to leave that untouched. I don't think they're going to leave this untouched. I think they're going to want to come back and tap that. Nice. Took the high, paid yourself, going so awesome. This may be the lunch hour. Come back here and take this out for lunch and then go higher. They're not leaving that untouched. I'm going to wait till 12 and see if I can see something in there for 12 o'clock. Right now we've come back, found support at this level. Look for structure break in here. Good. Now I want to see it come back and tap that right into the consequent encroachment of that and leave that last little portion open. Give it to us. It's just coming right off the top of the first presentation. Tapped it. Keep going higher. I got a long off my regular off there. I was hoping to catch that for my stop losses just got hit already. Right off here. There's another one. The body traded above there now. So a tap of that level right there. I still like to see this come back and just give this a little tap. That's 50% of that breakaway here. We'll just wait for that, see if it comes back and gives a tap in. Stop loss will go below this one here. I'm aiming for the next one. There's institutional order flow entry drill. Was I too precise in my setup? Was I too precise? Should I have been a tad bit higher? Like just above there, like that literally came down and the spread kept me out there. We'll see if that takes off without me now. That spread. Sometimes you can be too precise, hey? Let's see if it goes higher. Good improvement. Improvement. That's funny. Typically be one tick below this low, but I don't want to see the mean threshold give way. So my fail safe is going to be below the mean threshold, which is also the mean threshold of this order block. So this should be able to trip me in here. Once again, come down to tap me. I'll be right back. Oh, it did trip me in. Okay, good. Hi. That's it. I want to see it start climbing out of here now. Mean threshold. I'm done. I'm closing that one out. 3-in-1 candle. She's coming lower. Pay for some new information. We're going lower, so I don't think they, like I said, I don't think we're going to finish. I'm not going to leave this untouched before we go higher. We've got these pools of liquidity above us now. I think they want to run out for 11:30, 12 o'clock. Get down into this level and then see a run higher. I'm really stuck inside this range right now, and we're looking for discount. Just hit right off of it here. That's 50% plus. So if I'm looking at that small little range here, that's right off 830 again. Discount, premium. See if it gets back above this premium level here. Looking for a 714 close. If not, you're still bouncing around inside here. So it's a wait and see game now. The 1104 candle is missing from New York. This is the bottom of the hour now. It's 27. Let's see if we can hit this box now. There we have a small fair value gap at 1051. That one is very tough, guy. Need to break above it. 1051. This guy here, yeah. I still think we're not gonna, we haven't touched this hourly discount box here yet. And that's sitting right at that 40 level. So that'll put us right here at 42-ish. So if we just come back and reach into this hourly and validate that, that's also inside this fair value gap here. So I think I'd like to see it tap that for lunch hour and then start to roll higher. And that's right in that 6 a.m. candle, midnight open, all that stuff is sitting down there. So to me, that's always tends to be the draw on liquidity first. And, we haven't really been down there since 6 o'clock. So I'd like to see us reach for that. I'm going to go with you here, Hadi, right on your a little early, but I'd like to see that reach for down here. Move to a break even. Go to zero stress right away and just see if it runs. All right, just come on down there. Done. Here's a 6 a.m. candle. Trade completed. I said zero stress, man. My eyes are going around and around. Yeah, I said zero stress. I tried to remain as calm as I could there. Abs. Just picture yourself on top of the mountain, man. Just go to zero stress and let her buck. Yeah, I'm out as well. All right, so now what I'm looking for is to see if we've hit that level here. We're going to see how we act inside here now on a 616, whatever that low high of that candle is right there. 611. 611. 11. That one right there. So how we act inside this thing here now is pretty important for me. If we bounce off of it, and now we're looking for break, and I'd like to see, ideally, if you want to see, start to see this hold here now, and we want to see this continue, get marching back up here for our continuation. This is the retracement, and I want to see this push higher through here now. It's got to get above 751 for me on a close. So we're looking for the first little fair value gap right here to see if that holds. And don't forget, what you could be doing is just coming back into the lows here and continuing to come lower. So yeah, got to break that market structure there. Hiddy agreed. If you're just doing an internal range liquidity hunt, you're going from here to here. So let's do an internal range liquidity hunt. If we get a body that closes above here, right now it's closing on it. That's your debate. We've had this discussion in the past. You debate whether or not you want to take your long right there off of there. I'll wait for a body to close above it and then tap it. If it leaves here now, then, you know, that's your debate, whether or not you take that, catch that as a run, and you're catching. Now I'd be moving to break even on that, just so you're in a zero stress state, because you don't know if this is going to reverse off of here. You're looking for this new regular trading hour gap here and this order block initially inside this run. So the first inversion is right here. There. Now if this comes back and gives us a tap here, I'll take it. If not, we'll wait for a body to break above here, and that'll be the last opportunities to get in here. You can take a perfect entry. We'll be super picky about our entry here. Let's go here. Put a limit order in there, and I'll put my stop loss just below the equilibrium. So I want to see that come all the way back down and tap this. So if I'm on the wrong side of this and it comes back, taps it, I'll break out even, because then it's violated my area here. We've already come into this area. So we'll see if it trips me in here. So you're looking for an internal range liquidity hunt, and your resistance is right here. So see, that's tripped me in now. I don't want to see that get lower than 654. And if we close below 658, 654, I'm out. And that's my quick run on liquidity is right here. Because don't forget, this could be our next run down, and it is already. So that's already heading lower now. So now I want to see it come back into here. Close there, come back into here, and then you just paid for some new information. Tap that. Go short there. Now I'm looking for a short. Go to zero stress right away, because I don't want to see it come back and tap that again. I just want to see it leave here now. And take profit down below here. That should pay for the loss, little loss I took in there. And it's zero stress right now anyway, so okay. We're bouncing off that hourly again. So do we come back up through here? Use this as support now. And this inversion, or this fair value gap again. So I'm between the hourly and the 1 minute, trying to catch a reverse off this hourly here now to go higher. This is like if we were zooming in on a daily and it was coming into that daily perfect level for us to catch a reversal off of. Now we still got a little bit more left of that fair value gap on the hourly, which is all of this left in here. So we're looking for any opportunity now to see that reversal, to catch the reversal. And if you really want to confirm with the market structure shift, that's a bonus. But that's exactly what we'd be doing on a daily chart. We'd be looking, if that was a daily candle coming right into a perfect level for a change in direction, we'd be down here hunting for our reversal, which is what we're doing right now on an hourly level down here on the 1 minute, if that makes sense to you guys. You know what I mean? So we're using the same principles we're doing down here from the hourly, using the higher time frame level to catch our long, and we're looking down here for that opportunity. In our 15-minute chart, if you pull the whole range, institutional or the optimum trade entry reversal, 75%. So we've got confluences that support a level right here. There's a fair value gap down there being filled. We've hit this old high here perfectly too. So if we come down into the body of it, where does that put us? Right there on the bodies. That puts us right back in the 6 a.m. candle again. So now you just wait. And we're coming into 12 o'clock. So 12 o'clock would be a nice little opportunity here for the 12. If you're looking at Tibbs, 12 is the swing point. So we're looking for a 12 confluence, 12 o'clock reverse, 12 o'clock CAM model 1 to a CAM model 2 trade entry. So we've got multiple confluences that support an idea for this candle to create our low, or the next candle to just give it a little tap, which is that 12-hour candle, to give it a tap and then start going higher. We got another 15 minutes. So I hope that makes sense to you guys, but that's what I'm looking for anyway, for a trade entry. If you're trading on a 4-hour chart, let's look at a 4-hour chart. Here's your 4-hour idea. On a 4-hour chart, you want to see, why is all this shit in here? I never put that in there. What is that? Anyway, you're looking right here. You want to see at least just come down. If it's going to tap it, that'd be 619. That puts us right inside still inside our box here. Right on the very bottom of that is 610. That puts you right smack on the top of that order block there. You see that? That candle's high is 611. The candle's open is 609.50. That'll put you right here. So you'll have your 4-hour, your 1 hour, all those levels kind of coincide. So we're seeing multiple confluences, but the problem is when you get multiple confluences about something, you start to marry the idea, right? You start to marry the trade, as it were. So we'll just wait and see if we see something that's clean. It looks like it's from an indicator, but I don't have an indicator on that level. right click, right click, right click, right click. Yeah, I don't know what the hell that is. It's putting these bars in there, and I have no idea why they're there. Right click, drawings. I'm just going to remove all my drawings. Remove all your drawings. Nope. Settings, charts. I have no idea why that is. I'm trying to say options. I can't even turn it off. Let's have a look up here. Is it something in here? Fair value gaps, vertical, border colors. No. I have no idea why that keeps popping up there. Does it really? Oh, look at you, smarty pants. Oh, look at you, Campione, little smarty pants. I like it. That's just regular trading hours versus electronic trading hours. That's all that differentiates between regular. Got it. And electronic. That's electronic right there. Regular starts after it. Gotcha. I like this tapping of this high here. I like it as a buy. I'm just going to say I want to be one tick below that low. If I get back to the mean threshold of this candle on the close, I like to see that start marching higher. Take out that high, and I'll just move to break even just because I want to see it go higher. Looking for this first fair value gap above me here, internal range of liquidity hunt. So we've taken a little market structure shift here. Body's broke, traded above it. You've tapped it. Now looking for that to run up into this level right here. So take profit's going to be right in there. I don't want to see it get obviously back into this candle's mean threshold. Let's it tap that and go. You can leave from there. Don't underestimate 12 o'clock. 12 o'clock should still let's see, get back below here again now. come down. It's tapped the level. It's giving my level here. I don't want to see it come back down there again now. I want to see it start running up higher. Give me that high and I'll close out. There. Go to stress free and let it run now, because now I want to see that level. We validated that candle, so we'll see if we get straight to our objective now. Now you want to see it just tap there and just the high or the open. That's it. I don't want to see it come back any lower than that. So reach for my candle. I'd like to see it stay open. That'd be nice. Mean threshold's been taken now. See, tap right there and go. Leave that open. So the trade's paid for. So you get into that zero stress place. Just let it run now. There's the top of it. Now I don't want to see it come back down below there again now. I just want to see that leave, take that high, and I'll move my little stoppie here to there. I don't want to see it come back down there, so I've done the mean threshold now. We've broken it. We've come back, tap the old high here, and then I want to see it go higher. If it doesn't, so what? Come out with 200 bucks. It's not that I'm chasing my stop loss really tight, because I am, but I'm looking for specific levels. I don't want to see it break it. So I want that level, and if I get it, if I get that high, then I move to that level. And if I lose it, I don't care. It's a precise level. I don't want to see it get taken. It's been validated now. I want to see that run to my high. Right click. Would you say right click? Settings, symbol, settings, symbol, and then you said symbol, electronic trading hours, regular trading hours. There you go. No, electronic trading hours. I don't want this thing. 0. Gotcha. Apply to all. Thank you. You rock. When you say you want to see it touch the high and go, what does it actually mean? It's just a high of this candle. I just want to see it touch the high of that candle right there, and then leave. And then you want these support, those specific levels. So I remember when I was telling you yesterday about those key levels. There's 3 levels. You like the high, the open, the mean threshold, and you grade your trade according to those levels, right? So as soon as it comes down, it taps that old high right there. I want to see an old high. I want to see that a high here of this order block once it's been validated. And then if it comes back and taps me out, I'm cool with that. I want to see it tap this and I'll leave. If it's got intentions of reaching for my premium array, if it comes back down here again, I'll load in on the mean threshold. If I lose the mean threshold, it taps it, then I'll get out. So I still want to see that level hold and that mean threshold. I'm just below the mean threshold of that candle, I think. You should be about 1 tick below there. And I'm just above it actually. We'll see if it taps me out here. I should be just below that, half that wick. Just below 50%, which is that mean threshold. See if that taps it and leaves. If not, then it takes me out, and I'm okay with that. There's 50% right there. It got me. All right. Now we'll wait and see if it comes down lower now. There's a small little imbalance right here. See that? Stretch it out. Draw it out. And then it becomes a level. That's important. So mean threshold, it was just tapped below it. We're right up inside this one. Watch a retap of the 830, lines up perfectly with my order block candle there. It's a little data point. So if you come down and give that a little tap, I'll go long on there. Again, stop loss will go just below the mean threshold of that candle. I'll even put a limit order in there just because it's oops. How the hell you put a freaking limit order? Come on. What the mouse? Thank you. Limit order. That's the tap of that low right there. See if it gives us here, and then my stop loss will go just below the mean threshold of that candle. Now you want to see how it's acting here. I want to see it just snap off of there. That's going to come and run me out here now. That's going to run me out. Close that out. Inside this range, again, we're not down to that low. Look at that 70% reversal. Take this low out here. Look at this candle as support. That little tiny imbalance that we talked about right there, ran through it, came back, tapped it. Look for us to come lower now. Deeper into this range, I'm looking for 25% here, which is right here. All the way down to here. I'm going to put this guy right here. Watch these levels. If I get back above here, then I'm going back higher again. If not, inside this range. And watch this level here get taken. Here. Before it hits that, watch, see if it closes below. It did not close below there. Wick. Not clean. See, I'd like to have seen it close below here, come back, tap it like this right there, and come and hit that level. Fair enough. You can still hit it. See how that reversal here? He came back into it. Box to box trading. Just see if it hits it now. And then we'll see if we go through it. It's 12 o'clock. I'm expecting to see one more run on these lows here. So you're waiting for a break in structure for this guy here. So now that discount box has been hit right on the money. And that's a level of precision you guys need to see and believe, man. It like nailed it perfectly on that level. So box to box trading inside that one there. Now, the question is, do we break the high, wait for a market structure break above the high, or just sweep these lows here? Order block traded below it now. You'll trade it back into it. Now I want to see this just start rolling over and come lower. If we start to run back through this level, see how we're right on the close? We've tapped it, and now we're running higher. So changing direction. Right there. See how we tapped it, went higher? You're above the premium now. See where you close. See how quick you got to be right there? Literally quick tap, go. Premium rate, so you've gone from box to box, and then this little box here, box. This little imbalance, so this little box to that box inside this small range here. So you've gone from large to small. You're compressing now. You want to see it's got to break out above or below. See you tomorrow, Hadi. So you look at the swing highs, then the order blocks, then the mean threshold, because those are the points that price should respect if it wants to go higher. Yeah, so you basically look at the order block. So this one here, you want to look for the high and in the open supported, unless there's a fair value gap sitting right in there and you validated it here. You look for that one. Or you add two together. You look for the high, the open, the mean threshold of both of them together. Now you've closed above this level. So I'm looking for it to retrace into here before it takes that high. If it runs straight through the high, then I look for this candle. And then I look for that regular trading hour gap again above you. And that little imbalance right there. So I have to start cutting out some of these overlapping jobs now because they start to get too much. Okay, so before it takes that high, I want to see it come back into this level here. If it takes the high on a close, wait for the close. We make our decisions at the end, the candle's conclusion. So each order block that gets validated, you look at those three levels: the high, the open, and the mean threshold from above, and the low, the open, and the mean threshold from below. Don't ignore this. That little piece right there. This just whips. See how we closed below or still closed above it, and now we traded it. I want to close above here, and we've already hit that premium array already. So we haven't had an opportunity on a 15-second chart. Let's go back to here and see if you didn't catch this one right here, right as we were talking about it. If you didn't catch that one and you're looking for this retrace here, look on a 15-second chart and look for this one here. We're looking for a 15-second chart to see if it gave us an opportunity here. I'll mark them out here so you can see where they were. So it came down, got a reversal. Here's your first imbalance right here. That's the 1 minute. And that goes all the way up to right there. See how the bodies will come down and tap it right here? Go higher, take out that high with the body, come back, tap the high, it's an important level, and then continue to go higher. Take out this candle's mean threshold. Right here, you use the mean threshold to go higher, and now you're going higher. You got a reverse situation here. You don't want to see it close below that. If it does, look for a short back into this range. You want to see a scaffolding now. You want to see it get above this candle on the upside, find some support at it, and keep climbing higher. This becomes your 15-second level. Lovely. Validated it right there. All the way back to here. I don't want to see it go lower than that right there. Body stop right on it. Go higher. You don't want to see it come back down. And away you go. Don't come back down there. Immediate rebalance right there. You see that immediate rebalance? If we start trading below that, then I start looking for, are we hunting for this low here again? We've already taken out this high here already. Immediate rebalance, that now becomes an area of interest for me. And so does this. So if we break below this structure here, then we're looking for lower prices. If we find support above this level, I'm looking for higher prices. So you see how that level there, you want to see that hold and keep going higher. Then you want to see this one here, hold at the high, the open and the mean threshold once we validate it. Watch this level. Watch this level right there. If we take this low out, we could be coming back inside this range. See how we come right back up to the top of it? You want to trade through it to go higher. Oh, we're already going lower from this perspective. So it's got to close above here. This is where you get to switch back and forth. Welcome to lunch hour. Back and forth, higher, lower, higher, lower. Now you're going higher if that closes above here. Extends the range. Literally just opened on it, so now you want to see that go higher. Get on up there. Trades below it, then you're back to switching up and down, up and down, and you wait. You don't want to be playing inside that kind of mess. And it's lunch hour. Move to the sidelines, wait. wait for something decent. Trade below it again. Back to this consequent encroachment. Now we'll see if we wait and see if we get below here. I do like the fact that we came down into half that wick. This feels like it wants to go higher. Just let it buck, man. Go, go, go. Looking for 751 next. Still got to get a body above here. Let's go. This is a 15 seconds, so this is no different than if we were trading a 1 minute chart. You're still looking for the same kind of idea. Bodies above here. Tap, go. Little displacement, consolidation. And if we get back through, you just want to see it tap this and leave. I don't want to see it get through this level here. There's a small little imbalance sitting right here as well. You can leave now. Too much waffling for me. You want to see price tap it and go. When you start getting to that 12 o'clock hour, you've now taken out some highs. So we could get a retracement all the way back down into all this stuff here now for lunch hour. So be super careful. If you didn't see intentions to get the hell out of Dodge right away, like when it did this, it was like, great, now support off of there and go. Then opened, ate through the mean threshold of that candle. You're like, no, that doesn't look good. Now it's eating through the discount. Here's your discount box right here. You ate all the way through that, came back inside, tap, continue going lower, extend the range. You got to be quick to see this. As soon as you see that displacement below there, you go, oh, it's going to extend the range. Comes back, gives you one opportunity to get your trade off of, if that's your ultimate long there. And then you get back in sync with the market. It's taking those lows right there. And we're back into it, another run lower. So on a 1 minute chart, What about here now? We're looking right there. Watch it retap the low. Open. We've traded below that level now. I want to see that hold price and start coming lower off of here. We get back through that again, then you're back into a bull, your retail bull flag again. So if you guys are into bull flags and stuff, look for those levels of support inside the flag to go higher. If you lose those support levels in the flag, here's where your first indication for a failure of your bull flag occurs. When you take that low out, come back inside it for continuation on the downside. And your support of the flag is when you get above it, and then if you see another fair value gap inside there, you find support on top of that, then you're looking for a run back onto the highs again. Otherwise, this for me is an indication for the bear or the bull flag to fail. And she fails. Comes back to our order block here. Make sure you pay yourself there. 50% of your range. Right there. And if you want to see that keep coming lower, you want to see that eat down into this discount box here, this one and this one. It'll be just like a lunch hour to be annoying enough to come back into this range and just run out liquidity on both sides and just like do a little seek and destroy, keep clearing out the liquidity. There's the first one. First box is hit now. I like to see us come back into that consequent encroachment there. Just tap it and come back lower. And start to drill through this level again. Right there. And away we go. Perfect. And we start drilling through it. So I took a short right there, right at that level. And now I am way in profit. And I'm aiming for that next objective right there. I dragged my stop loss right down tight. So from there to, I think my exit was somewhere around 75%. You drag your stop loss down behind it. It's that whole 50, 62% stop loss that I've been telling you guys about. When you're inside our internal range liquidity, you drag your stop loss down and you literally have to grab it and pull it down as it's running hard down like that. You got to go 70, hit 75, hit 78, go to 75, and then if it pops it back and takes you out, then it takes you out. Look for that sell side run through here now. I like to see this little sell side down here get hit. Which is my next box, right? Let's get rid of this one now. So return into 684. Now I want to see it go lower from there. Lovely, lovely. No, I don't want to see it come back out. All the way up to 6. Nope. Hmm. 693. Let's see, get above 693. Yeah, okay. Six 93. Right on the money too. Love it. So you can continue coming lower now. Let's get through a close of 670. Forget this now. Have a great day, Chris. Glad you made some cash, buddy. Good for you. Follow the rules, man. Follow the rules. Yeah, baby. There you go. Gotta love it. Rejection block. Pay yourself at the rejection block. That's the discount box. We've gone from box to box to box. I've pointed out every one of these boxes for you guys to take profit off of, to get in on, to extend the range, to go deeper into the internal range liquidity. Pay yourself at the discount box of the next range or rejection block, whatever one suits your fancy. And you should be able to slowly accumulate some gains here. Once it starts to smoothen out here, and you can look at this internal range of liquidity hunt. Not that this has been fun. This has been a real challenge, but if you're disciplined enough to follow the rules, you'll make money. Now I want to see a close below. I want to see a close below 670. Next 10 seconds. There you go. Now come up to 670 and you can go low there. I like to see that just continue coming lower now. Let's do a little sell right there. As soon as it takes out that low, I'll move to break even. $676. No. It's going to come back and tap us. That open range there. Where are we going for? Here? That's going to come back and get us there. Yep. There's a small, am I missing a small imbalance here? All the way up to here. Right there. Let's see if it closes on there. Oh, right there. That's 693 again. I've already hit 693. Where are we closing? We'll just come back and do a little damage on that wick. That's it. Nasty little fella. I'm still short on that. No, I'm not giving that an opportunity to take me out. So I've endured all that wick there, and now I'm right. It just took me out. I was like in short here off this inversion, and I had to endure all that just for it to come back now and move to break even, and then it plus the cost of the trade, and it just took me out. So lunch hour, the lashings of lunch hour. It's still going to come down here. It's just whipping back and forth. If you're whether or not you're willing to put a lot of uh, small leverage on that, but a huge drawdown just to get a small little bit of profit. So it's still going to come down here. Just your stop loss is going to get stretched tight. You can't play this too tight now. It's getting choppy. It's getting lunch hour. So you want to see a structure break here and use this little level. Now we're inside it. I want to see it just come back up inside here, and then we can recoup. I'll take one more short right there, and I'm looking for just to recoup my losses down here. And stop loss is going to go up there again. If you run me out up there, that's it. I'm done. See, we've already traded back through it again. 684. Well, that's it. Lunch hour. That's typical lunch hour. I keep giving my shit back here. That's a demo trade. I didn't take a live trade on that. That's choppy crappy. I was hoping that this would be once we came through it, fell one more time. And that's not rule. That's not an ICT thing. That's just not following the rules. Wait for a structure break. Wait for a structure break. Try to play too fancy, too fast, too furious, you're going to get your ass handed to you. So we've broken this little swing here. You got a reverse here. You've traded well above it on a trade. You've come back into this order block here, and now we're above the body here. So you're looking for a run back deeper into this range. Look for 50% of this range. There's 50% here. So at least we'll look for minimum there. And then potentially a run right up to this guy here. I'm going to get that one out of there now. I'm going to get this one out of here now. Look at a body above this level, find support here, looking for this to go higher. Inside this range now. I'd like to see at least 50% of that get hit. I'm going to go one long right there. One tick below that low. You'd wait till it hit 50%, but I'm not going to take a hit there, so don't take any more hits. It gets to 50%, you take half off. Now I'm going to chase this, so I'll chase it with the so there's 50%, so we're at least break even. It's that hit 62%. I'll chase to 50. I'm at 50 already. There's 62%. That takes back one of the losses we lost there. Now we're out. Okay, so you pay yourself there, and that was just to recoup whatever little loss we took in there. That's off this order block here for a run to 50, 62%, take a portion off there, so on and so forth. And it's right on a Crazy Ivan. Now I expect to see that reverse and come back down. Crazy Ivan's that whole bottom of the hour to candle 38 on the Tibbs. If you use the Tibbs stuff, if you're into Tibbs, if you're not into Tibbs, don't worry about it. Thanks for everything. See you all tomorrow. See you later, Abs. Take care, buddy. Five-minute. Let's look at a 5-minute chart right here on the big screen. Look at how choppy that crap is. That's such a choppy morning. So the moment you break, you have to wait for a structure break. So Hadi would typically do this, and this is one of the rules that you guys need to follow. If you see a 4 o'clock in the morning, for example, you see this, that's the low, and the Tibbs, you'll see a 4 o'clock will be a break. Wait for a swing low and a break to happen, so you've got a consolidation. You just see a displacement above it, come back inside. That's a CAM 1 model. Here's a fair value gap reversal. Body trades above it. You have a CAM 1 model and inside a reversal as well for continuation to the upside. You wait for market structure break right here above the upside. Body breaks it right here. The moment you trade back into that candle, you get long. So you go long off of there. If you want to wait for a larger consolidation, your body breaks above it here. You come back into it here. If you look at that whole consolidation for another CAM model entry, if you want to include all of this as well, there's your body. Your body breaks the high here. You come back inside that order blocks candle, and then you continue going higher. So you have multiple different entry points on a 5-minute chart there. And then you've got reversal here. Body trades below it. You come all the way back up inside it. Bodies respect it. Roll over. Discount array is way down here. You hit the discount box. So box to box, that perfect entry, perfect exit right here. You're done. Wait for it to break market structure to the downside. It breaks market structure to the downside, comes back inside this breaker. Draw the breaker out. This is the same stuff every freaking day. Look at that. That's a precise level that you hit. You come back inside it, extend the range, run back up it, come all the way back down inside this little tiny imbalance right here. You trade below it, come back up to the premium level. Now we're looking for it to run through this level and continue going lower. Take out these lows, looking for a continuation on the downside. So we're still looking for that lunchtime to take out those lows. Tap in there. Now I want to see that just start coming back down again. Right there. You can go short there. And I'm looking for I guess we'd have to look for rejection block down here. Stop loss will go just above that candle's high. Takes out that low. So now move to break even, stress-free trade, and let it roll. If it comes back and taps you, then it comes back and taps you. You got a little bit of 50 bucks, whatever. I'll come back and tap that. Now I want to see that go low from there. Just want to see it tap this level. That little imbalance right there. Right there. And I want to see it come back down from there. I guess you can incorporate up to this candle's bottom here. We've already done it with that one. So I wouldn't want to see it go any higher than that. Just start coming back down lower now. Stop loss will go just above that candle's high. That's the breaker I don't want to see get taken on the upside. So I want to be just above the mean threshold of that. So if I start to eat through that breaker, then you look for that to come back on the other side of it and then continue going higher. Yeah, I don't like this already. We've already traded above that level. So rule is get out. You're on the wrong side of that. You're on the wrong side of it. So wait for it to trade back below here. You're still inside this breaker. Good. Wait for it to close. Push hard now. We'll see it accelerate through here. There you go. Give it a little tap. There. Come back down now. This candle's open. I don't want to see that mean threshold get taken. I was in this trade. I'm out of that trade now. I don't like the way it's baffing around in here. So move to the sidelines and wait for a body to break down below this level to get a structure break. Otherwise we can come back inside this range here all the way up to 686 to 684. We might see 550 today, you say. We might see another plunge down into 610. 600, 606. Those are my downside. Those would be my downside looks. I like the fact that this wick here on an hourly is holding at the 50%. Now you want to see that hold there and start going higher. I don't see it get any lower than, like, I don't even want to see it take out these lows here. I just want to see that just keep marching back higher. That what I want and what I'm going to get. Maybe two different things. I think that might be it for me anyway today. I just want to see that start climbing higher now. That it's done its job. Here's our swing. 50% of the wick. Get out of Dodge, man. Let me see it out of here. Wait for a structure break here, or a return back down to 686. And you're already at this. I'm looking for 686 to give me a range extension here now. 686 to 684. There's 684. You want to see it get out of here now. Tap off the 830. I'll be okay with that. What is that crap in there now? Nope. We're already through it again already now. Back inside this range. Back to an old high. Now you can get out of there. Gotcha. You just came back to tap the consolidation there for a CAM 1 model. Lovely. Let's go. Wait for a structure break and wait for this premium level to get taken here. Important levels. Again, you want to see something break out of here with some intensity, with a sense of, now we've got a body above here. I like that. I like to see it just tap here now and right into 697 right there. No, I don't want to see, I wouldn't want to see it get past 50% of this, or this wicks open, or this candle's open right there. You start eating through that now, I'm definitely not happy with you. I want to see that start marching higher now. Start cleaning this out. I like the fact there's a body above here. I like the fact we've just tapped this order blocks open. I'm into a stress-free trade now, so took a long there, and now I'm just into a break even. If it comes back against me, I don't care. It's lunch hour. You got to give me what I want, especially in lunch hour when it gets really choppy like this. You got to demand, this is what I want from price action, or forget that noise. Get up there. Take these highs. Let's go. Put yourself at the first high. Put yourself there. And I just did. So now you want to see a body close above here. If you like what we've been doing today, and again, it's been really choppy, so you got to be real careful with your price action. You got to be super nimble, and you got to be, if you want to participate in a high resistance day like this, and you want to get your ass handed to you, and you don't follow rules, you will get taken down. There's no doubt about it. You'll get taken down. So you don't want to expose yourself to that kind of stress. So follow your rules, and don't participate. Walk away from the day if you have to. No body above here yet. Pay yourself at that high. If that reverses on you, you'll be glad you paid yourself at the high. If you like what we're doing, hit the subscribe button, like, tell your friends, invite your friends. We're just here for price action study. I'll show you some trades on there every once in a while, but that is not my focus. I'll tell you what the trades are. It's up to you to decide whether or not you want to take those trades. And I usually tell you after the fact, or I tell you I'm getting in here. Seldom do you see me actually take the trade unless I do it here in front of you. And if you don't like that kind of trading, there's many people out there that are trading live in front of you. I try to give you a narrative, and I try to get you into a stress-free trade as quick as I can, so that you feel I feel your anxiety out there. I feel your stress. Watch this level right here. You've taken that high now. Look for this level right here. You've already traded below it on a, you see where it ends here. So we make the decision when the candle's over. If we're starting to get back into this range again, watch that level. You see if you close below it. And if you like what we're doing, hit the thumbs up, like it. It's all good. I appreciate you guys your feedback. It's important to me. Let me know. And AKZE, I know you appreciate a nice little trade in front of you, which is I'll try and do more of those for you. I just don't want my focus to be all on copying the trade. I want you guys to really learn how to watch price action here. So you see how we traded below that level? Now that going long is not my objective. As soon as we trade below that, you go, I've taken a high, I've got this, we're coming back inside this range here, right? So you're looking for 50% of that range. And I told it to you right before it happened. So here's 50% of your range. As soon as you see this, watch carefully. As soon as it closes below it, get out of your trade. That's the rule you have to establish. It's up to you. If you endured that right now and it came back and took you out and just took your stop loss out and you're frustrated, there was your evidence that it was changing direction right here. Came back into the 50. Now you can trade through it and we get the next price leg higher. I'm all right for that. But if we don't, if we just trade back and tap it and then roll over and come back down again and we eat through half this wick, then you're looking for a discount box way down yonder. I would say right here. Like array to like array. You watch. Remove this. You watch those two. You've hit that one, or you haven't hit that one. You just traded through it. If you come back and give it a little kiss right now, I'd look for this like array down here. Or, excuse me, if it comes down, taps this, goes higher, and then hits that one. Like if you don't get an opportunity to get in on that right there, it's just tapped it. So I'm going to go sell short right there. We'll try this one. And if it trades above me, I'm out of that trade. So I don't even want to see more than mean threshold of that wick. Now I want to see, I'm just putting my stop loss down, or my take profit down here, right on that sucker right there. So if it trades through there, I'm on the wrong side and we're now going higher. You're just paying new information. It's not, don't look at it as a loss. Just look at it as I've just got some new information that tells me this is probably the next price leg higher if we break that high. If we don't, this is like for like array to like array here, and see if you get a continuation on your trade here. So now I'm going to move to break even. I'll even come in a bit more profit there. Oof. Look at that, literally came back and said, stop right there. Don't you dare come another step closer. So it's a stress-free trade right now, right? We look for an entry point, now looking for an exit. It's probably going to come back to this order block here, or yeah. Either way, I'm still looking for this one down here. That made back some of those other couple of losses I took there. So AKZ, there you go. There's another quick trade for you. It's a stress-free one, but we'll see if this continues to make it from like to like array in a boxing environment. So I hope it helps when it talks and I talk it out, that I'm not talking too much for you guys. Or, you know, if you watch carefully what I'm doing, you say, oh, he keeps changing his mind. He can't make up his mind where it's going to go. I'm just staying on the horse. That's all I'm doing. So when it switches up on me, I'm out of the race. I got to stay on the horse. It's spinning, it's bucking, it's trying to get me off. So I got to try and stay in price action. So internal range liquidity hunt. If you use that, if you're into the, and again, you got to follow, there's a set of rules. If you guys are not disciplined to follow those rules, if you were in here, for example, that trade we were just in, and as soon as it hit 50%, you quickly snap your stop loss down to break even, hit 62%, then you come to 50. So we'd be sitting at break even right now if you follow the rule specifically. But to me, that's a big run, and 50%. You want to pay yourself a portion there. I only had one on there anyway, so I chased it down as fast as I could, and then it took me out. So pull your fib tool on that. We'll assume if we just stuck with the old rule right here. So that's where we got our trade in. So we'll say we're at break even plus the cost of the trade now. So this is our stop. We paid ourselves right there. If you're only got one handle on, we're just going to wait right now for the 62. Okay, now we're at 50 right there. Okay, so if it comes back and taps us, we're out of our trade. So watch carefully here now. If it goes to 70, we're looking for our discount box down here. This is an internal range liquidity hunt. Look at that, so close to 70. Tap that body and go. You don't want to see it going any lower, any higher than that. Go. Let's go. Down, down, down. That's validation of the order block. 1, 2, 3 levels. And we're just sitting right at the mean threshold of that. So I want to see that, tap it, and now keep coming. Support, support, support. Don't come back up. No, tap the 50% and that'll get us. Did it get us? It would have got us out right there. So you paid yourself at 50, half your trade is off, 62%, you moved to 50, and you pay yourself there, and you didn't quite get 70, otherwise you would have moved to 62 and you could have got out there. And that's it. You're done. You're aiming for here, and you got taken out a little earlier. Using that rule, that's it. If you just stick by the rule of, as soon as that goes in there, takes out this low, I'm moving to break even, and I'm going to leave my trade on until it hits my box. That's box to box trading. And you say, I don't care if it comes back and takes me out. It's a trade. I was just looking for an internal range liquidity hunt. And if I didn't get it, I don't get it. I don't care about missing out on this. I just want my box to box, and that's it. Or you go, I'm looking for a reversal to reversal. Just simply, as soon as I see a reversal, I'm into the next reversal. I'm just going to take this, even if it runs through there. I'm just going to wait for the next reversal to get in on that to go higher. Now, if you're like most of us, we don't want to give up profits right away. So the 50% rule or the fib tool is a great way to do an internal liquidity hunt. So you got all the way to 62 and see how it's traded back against us now. And you've got to, even if you're on the wrong side of this and it goes higher, you got paid inside the wrong direction. If that makes any sense to you guys. If it doesn't move smoothly in the PM session, I'm going to move to break metals. That's funny. We're back through this level again now. See how it's a good thing you paid yourself on the way down. Now that may not be your trading style. You may not like that kind of trading style. You may go, that's crap. Okay. If it doesn't work for you, you don't need to shoot it down. Just say, okay, it doesn't work for me. It's not my style. It's just, but it translates on a 1 hour, 1 day, it doesn't matter. Same thing if this was all daily candles and that's our downside objective, and we pulled that, and every day we're looking for another run to 50%, 62% of that range. That's what we'd sit on there. We'd come back at the end of the day and say, did it reach my 62? I'll have a sell order, and then you can put limit orders on the way down if you want. See, now look at that, opened on it. Now you're looking for that to go higher. What's your guys' favorite prop firm out there? What one can I buy this week for you guys and have my little draw. I like this buy right here, right off that candle. I don't want to see more than half that wick get taken, so I'll put in my stop loss right there. This order block here, I want to see that hold price. That little inversion we had right there, it has the hold price. If it doesn't, it comes back through it again. We're inside this range, and I'm on the wrong side of it again. So watch right there. Ugh, on the wrong side of it. See, ideally, you want to see it tap what it just did there, and then just start leaving. The fact that it went here instead of coming back down, you're like, oh, I'm on the wrong side again. So you got to be prepared to take a hit. Deeper run back into this range here. I didn't see that. This is where you get tired. You're not looking properly. Look for 50% of that range. There you go. Just dipped into the discount. So I should have had my stop loss sitting just into this one here. It's going to go higher now. Tap it. You don't want to see it close below it. Well, that wick did the damage. I want to see that hold price now. Yeah, if you guys have a prop firm in particular, I don't know if Fivers or Trade Master, or I don't know what the hell are all the different types of prop firms out there, but I got to get something that's universal for everybody to use. I don't know if a lot of the countries can, you guys who are from different countries can actually use that prop firm. So give me your most common ones, or I'll just draw a name and you give me your name and I'll arrange for whatever prop firm you like for you guys. You let me know and I'll cover the cost of one of their monthly sessions. So I will do a draw in the middle of the week, probably Wednesday, and we'll see if you guys I won't call the name, though. It'll be, I guess it would have to be, because I have to look at my subscriptions and see how many people have subscribed, and who's in the number that I pick. Still like this level here, giving some support. Wick's doing some damage here in the lunch hour. Still looking to get back above this level. That's the premium level it's been hit now. Gone from immediate rebalance right here. to premium array. Now I want to see us eat through that premium array. See if we can pop up through here. What's this one? Is this a different one? Is it a 15-second one? Stand by. Nope. Oh yeah, it's an imbalance. 15-second imbalance. Let's just say this one here looks better. Close above that. I'll be happy with that. See how the bodies are just closing above here, tapping this? You want to see it just get out of dodge now. Mean threshold, go. Otherwise roll over and we're coming lower. That's it. Premium array is just not letting us go here. This is good. Let her buck now. Let her go. See if we can't there's a retap. We've traded above it. Retap it. Start pushing higher. So I'm looking for 752 now. 751. Then 770. $7.97. I think that's going to be it for me, you guys. What it to take the lunch high? Yes, I wanted to take the lunchtime high. I'd like to see it, clean that out, and then start moving for 2 o'clock. Look for a change in the next 2 hours. So I'm looking for this hour and the next hour to take out that high, and then see if we get a reversal around here or the mean threshold of that hourly candle. That'd be another hour or so for another run higher. With a downward, if we break this high here, I would like to see no more than 718 on the downside. 718 puts us in right inside that inversion again. So once it takes off from here, I wouldn't want to see the next hour come back into that, no more than that, and then leave. So this would be the breaker. Mitigation. So break through here, use this as support, and then eventually I want to see that hold price. Yeah, that's what I want to see. That's going to be it for me, you guys. I'm out. This has been a choppy, high resistance day. It's been a tough call. If you made money today, congratulations. We are in a very small number of people that actually made money today. If you were nimble enough and followed your rules enough, you'd be in profit today. So if you didn't, you took a hit and this just kept beating you up over and over and over again. Check your discipline levels, check your rules, and make sure you're not just one of those people that want to be in a rush, the rush of the trade, because you're gambling with your savings here, right? Any questions before I leave? Is there anything specifically you want me to look at before I go? There's that level we were looking for in oil. Traded down. Look at that. If I draw that level out, we went through it. We came back to it. We came back to it again. And now we're looking for a run higher. So one right there for a long, there for a long. So far, it's that level's holding. Once we came back through it, that level's holding. Gold. Gold's got to get above this level on the close. We said it would go higher. Found support at that level. Above the 4 hour. Look at that, landed right on top of that 4 hour inversion. So looking for more upside in gold. UNG's not doing anything. Bitcoin found support at that level. Did not make it down to our discount box. You did get a run below a low, reversal, trade all the way back inside that little imbalance right here. Push higher, take out this high, premium array, come back inside the premium array, range extension, classic range extension, wick below the low, into that order block, takes out the premium, comes back into the premium, range extension. It's over and over again, you guys. It's the same damn thing. You see it happening. I'm in some profits here with peyote explorations. I'm in these guys here, so I think I'm going to go take some profits out of that. Move to the sidelines. And Walgreens and Disney. Look at that. Disney. See how this body here was above here? We opened, tapped it. Now we're looking for higher prices. Let's go Disney. DAX hit our 4 hour objective. We're looking for in DAX. Just nailed it there. And still waiting for Dodge to make a little dippy down. Ford's not there yet. Euro's still heading up higher. That's what we wanted on the daily. So we're looking for Euro to keep pumping higher, clear out above this level, come back, find some support at it, which is what this line here is about, and start moving for the premium array above you. Moving that sucker into profits now. So I'll just move this into a stress-free trade now. I'll let it run for the rest of the day, the rest of the hour for some profit. And this lot is really based off this hourly. When we said that's the level we wanted to see it come to, we're looking for that reversal down here, right there. We're looking for any reversal. Here's the reversal right here. So, and it's been not a nice clean reversal, just so you're aware. Right there, you see, that's what we're looking for on the higher time frame. You find it on the higher time frame and you start to hunt for it in that field. On your lower time frame, this is when you look through the stethoscope, or you look through your stethoscope, look through your scope, and you start to put your crosshairs on a target. So you wait for your little cattle to come in, your elk, your deer, whatever, if you're a hunter. This is it coming into view, and you wait for the whole body to come into view. You come in, you take your shot, you pay yourself there, or you take your shot, you leave that. That's your 4 or your 1 hour entry. And look where that entry is, right here on your, I'll put this on the chart right here. So you could say your entry would be like, a perfect entry would be right here. That would be right there, right square in the middle of your trade. So it would have been right there off that consequent encroachment of the wick. And that's the consequent encroachment of the wick. Perfect entry for a long. And you left that now, and you say, I'm going to leave that until that's a 12 turns. That's a Tibbs. So if you look at Tibbs and you go 11, 12 on the looking for a reversal, 12, 13, 14 looking for first, second, and if it just continues to blow through here, you're looking for any sign of a reversal here now. So I'm moving my stop loss into more profits. Keeping in mind this could be a reversal now that we've taken out that high. And that's it. See you, bud. Disney, please. Let's go. Your Disney is doing really well. It's maintaining its nice little pop off of here. I like that. It's still going higher. Watch for a run higher into this range. Look for this previous high here, and I'd move my stop loss up nice and tight now. I don't know if you can with your Disney, how you trade that, but that's the level you want to be watching for now on your 1 hour chart. For further upside, keep your eyes right there. You do not want to see it close below here. So carry on up, reach for the highs, and keep on trucking into this range. So right now, Craig, if you just look at that and wait for your first reversal, one of these reversals, as soon as it takes out a high, you see a reversal, it trades back into it, close out your trade, or you do what you want, but you know. Yeah, that's what I would do. And looky. Gotta love it. Opened above, come back in, tapped it, and we're going higher. Looking for our upside objective. Look, this was the trade of the day right there. Using Tibbs, using your higher time frames and lower time frames to zoom in on a trade, albeit shitty high resistance trade day. If you were disciplined enough to hold this and say, I don't care what happens here on the 1 hour, 1 minute time frame now, I'm just going to let that buck and I'm going to wait for it to get back up there, done and dusted. Okay, does that make sense? I hope you guys got something out of that. If you do, thumbs up, subscribe, and I'll see you guys tomorrow. Thanks very much. Does anybody else want me to look at anything else before I go? This is more like it. Cheers for Disney. You're welcome. Love it. Like it. How you talk through your trade. You're a good teacher. Thank you, Rafiki. I appreciate it, my friend. Thank you. Thank you. Keep your stop loss. Watch for those reversals now. Here we're hitting that upside objective I was telling you about. Right there. You should be done. Move to the sidelines. Pay yourself. I'm moving into some more profits, and I've hit an upside objective. I just want to see I'm going to catch a reversal here, and that's my trade to get out. I'm done. That means I'll be done for the day. Take my profits, move to the sidelines, and count your lucky stars. You didn't get your ass kicked in a day like high resistance. Welcome to high resistance. But we still stayed on the horse, my friends. In spite of all that chop, those of you who stuck around, all 24 of you, bless you. Thank you for your time. You got to see how if you stay disciplined enough and you know how to stay on a horse in terms of price action, you can still pick up a trade. So I'll see you tomorrow. We'll catch a better trade tomorrow. I'll take care. I'll see you soon.